Welcome everybody. We've got another episode of the Property Web and lots to get into. So really looking forward to this one. It's a time to sort of talk a little bit more about tax, which I know is not always the topic that people want to touch on, but I think we can learn a lot from it. Today we've got someone amazing. We've got Joy Ford, who runs her own business beyond taxation. And I'm really excited to sort of get into this and figure out what people may need to be thinking about or doing next. And so Joy, welcome.
Thank you. Thank you, Tom, for the opportunity to share my story and my business.
Absolutely, yeah. And I think I always like to touch on the personal because it's not just about, the nuts and bolts of what you do. There's also a story behind that and kind of the reasons why you're doing it as well. So why don't you tell us why don't we start from the beginning of your Australia trip? Because I'm also not from Australia, and so I do resonate with people who've come over here. What was it that led you here to Australia?
That was probably about 25 years ago. So I came to Australia, came to study. Then I fell in love with this country. I like the fresh air, the blue sky, the oceans. I grew up in the seaside. So I love the ocean, love Australia. And particularly I like the smile on people's face. People can be a stranger, say hello to each other on the road. Probably not nowadays, but used to be 25 years ago. So,
simple pleasures.
Simple pleasures. So it just... so friendly, so welcome, and so welcoming country. And I do like the respect each other, for people respect each other and respect each other's privacy.
Okay, so you came over as a student. That was the big appeal initially.
Yeah.
And what did you study back then?
Accounting.
Obviously, yes. And so what was the dream at that point? What were you planning to do? Like, did you imagine you'd start up your own business, or was that always on the cards?
No, in the beginning, right? Okay. When you finish study, you want to find a job, and you want to find a job. You want to stand foot in this country. So that was for a few years, until one day kids came along. That's become impossible to work for someone else, get up early morning, come back home late. Then I thought, maybe I should start my own business. And that's how I started. And for nearly 10 years now, I quite enjoy that work-life balance. I do work on Saturday sometimes, but I do have that privilege. If I need to go to, schools, some ceremony or assembling, I can be there. If kids are sick, I can bring them to see the doctors.
You get to decide.
Yeah, I get to decide when I work, how I work, who I work. So I think that's the main point for enjoy doing business as a business owner myself.
Yeah, and you get to give back as well. I remember when we first met, we talked about what we do for our schools, our local schools, and I'm on the P&C of my school, and you play your part as well. I think being an accountant, you get the treasurer role. But
they say you have to be the treasurer. You have to look after our book. So yes, I'm in the P&C of my kids' school. And I remember last time both of us cannot go to one of the meetup group because both of us have to go to the P&C meeting.
Yes. So, it does come with commitments, doesn't it?
Yeah, it is.
But it's incredibly rewarding when you see your kids go through the school and you get to actually contribute back through fundraising or getting policies in place and, so. Yeah,
it's a quite interesting journey. You get to know, especially in kids in high school. Not so much in primary school, constantly contact with teacher, but in the high school, kids tend to be on their own and not much communication in terms of teacher and us as parents. So we do go to the school maybe once a year to meet a teacher, get a 5-10 minutes out of it, and running around for the 10 subject. So not much opportunity, but by joining that school, the PNC group, we get to know how the school run the classes. And then especially we got an interesting topic the other day, talking about the well-being, talking about the school using how the school using AI, have a different, login software, kind of encourage kids to use it, but also in a restricted way, because we cannot stop that, the wave of AI, but we just need to adopt it and how to guide the kids go through that process. So I think it's very rewarding role in the PNC. Yeah,
absolutely. And trying to use AI in our business, I'm sure I am, and I'm sure you are. I guess the kids are doing it too. Everyone's doing it, right?
Yeah.
So why don't you tell us a little bit more about, how the business, well, you've told us how it started, but who are you actually trying to sort of help? Who are your key customers, and what sort of stage are they at when they come to you?
The idea, which our customer is a small to medium size business, because those are business owner, they do not have a resource, maybe have a full resource to have a finance team to do the things, to do the cash control, to do the planning they needed. So this is the space we can step in as a content step in to help them to do a proper cash flow, to do a proper planning, to help their business grow. So that's one side of our business, and we like to help those small to medium-sized business. The other area which I found is many professionals, especially medical professionals, doctors, dentists. They are very busy making money, but they have no time for their tax. When I see the doctor or dentist come to us, I usually find a few years tax return outstanding, and I pay lots of tax. And sometimes I tell them, I wish you could come to see me a bit earlier. We can do a little bit planning. I just hate you sending 50,000 to tax department. And if you got a 2 or 3 years and then you got a GST, that's a couple $100,000 tax bill you need to pay to the tax department.
What are the mistakes that people are making? Like, I mean, bring that to life a little bit more. What is, if someone's a doctor, they've got 2 years tax returns they haven't paid? What are is that the mistake, or is there other things that are sort of building up?
It's kind of they don't have a time to manage it, and they keep delayed it. So that's one mistake. They're not managing the tax obligation, lodgement obligation. Because of that late lodgement, there's any planning, any structured advice, any planning advice is going to be too late, right? Because every financial year, we usually run year-end financial planning, tax planning to maximize the tax, maximize the money, keep it on hand, and minimize tax. That's what we normally do. But by not lodgement that tax, by not talking to accountant regularly, they're missing the point. They're missing the planning point, and that's the time, sometimes very time sensitive, such as the super contributions.
Because you can't really go back.
No, you can't.
And just do something that, it's all forward-looking in terms of what you implement. And
definitely.
Yeah,
definitely. There's a deadline you need to meet if you want to claim tax deduction for certain things, especially super. So if you miss that opportunity, even you might have some money sitting in your bank account, so you just miss the opportunity, right? And then that's everything too late. Then you end up a penalty, potential interest catch up, and it's combined impact on you. And then next year you're going to have a very, very big installment. So cash flow is also a problem. Even doctors, dentists making lots of money.
So you brought up there what happened. People are making mistakes. They're not coming. They're not thinking about tax. They're not planning it properly. What are some of the things that if people do reach you, what are you doing, or what are you suggesting they do to fix that? What are the top on the list?
If people coming up with the outstanding, we try to catch up as soon as possible. Make arrangement. Call the ATO. Stop the reminding letter. Catch up the lodgement as soon as possible. Then we put a forward plan. Say what we're going to do going forward. can we fix the structure? If you're already in a wrong structure, can we fix it? Or what can we do going forward to make it more tax efficient? And how are we going to make the cash flow tax planning more efficient? Sometimes we need to use the software, right?
Are there any big strategies that people would be putting in place? That if you've got you mentioned a $50,000 tax bill. I know I've got a client with a $100,000 tax bill. What are the big picture things that they can be thinking about to try and minimize that? Or are there any?
Yeah. I think the first part is just before it's too late, make sure you go to see the accountants can help with set up a right business structure. Mm-hmm. Is it going to be a sole trader structure, a company trust structure, or a trust structure? Can you run through that structure? Can you use that structure to minimize the tax properly? That's a structure
so it's the foundation.
side.
Yep.
Foundation part is very important. If you get a wrong structure, sometimes you can end up paying a lot of tax. Mm-hmm. Yep. So structures, business structure as starting up, on the day you're thinking about you want to have your new business, you should have a structure set up properly.
Is the mistake there that people are just starting as sole traders, and then they're not perhaps seeing where it could go after that? Is that the common?
Yeah, I usually
mistake?
see people just say, "Wow, someone asked me to give them an ABM, or I want to start my own business. That's just a search how I register for ABM. They search up ABR, they register, take them half an hour, 20 minutes, done, get an ABM. And they think that's it. But this is more than just ABM, right? ABM, it's your sole trader business. It linked to your personal, asset, personal tax rate is on your personal. So come back to the point is it's of course the apply for ABM simple. You can deal with it yourself, but is it going to be in most tax effective way? Probably not, right? Before you consult with the tax professional.
Yeah. Okay. And so then, the structure is one big mistake.
Yeah.
And there's multiple ways that they can sort that out with trusts and different business structures and all sorts of incorporation methods. What about another one? Is there another big ticket item that people are making a mistake on or could do differently when it comes to tax?
When it comes to the tax, I think people fail to plan the cash flow, wait until last minute. Cash flow is people quite struggle, small business quite struggle with the cash flow. Sometimes they put their heads in the sand, try to say, let's not deal with it until the last minute, right? And then that's another problem when your cash flow hit your business, and in the meantime, you have to deal with put some money away for the tax department. That can be difficult. So when I always recommend my business clients say you at least need to have a 2 bank account. One bank account as operating purpose, right? In and out expenses. But in the meantime, you put some 20% or 25% to cover the GST, to cover that tax. It might not be enough, right? But at least you put some money away, do a calculation, put it away, and then sometimes every quarter end or month end is quicker than you think. Just come around the corner. You got a PRG withholding monthly, possibly, and then quarterly you got a super, you got a PRG withholding, you got a GST. Lots of the bill coming up very, very quick. So the other suggestion is to have that, manage that cash flow by separate a couple bank accounts, set it up, put the money away, rather than you see there's a 50 grand, let's spend it, because that 50 grand is not yours. Some of them is belong to tax department. GST is a big part. PRG withholding on the salary is a big part.
And so some of these things may seem obvious, but I suppose if you're seeing people who this is not common, like they're just their head's in a different place, I suppose, and they're just focused on the business building, and they're not just
they're not planning cash, I think you need to have a proper planning cash flow. Talk to your accountant, see how much money I need to put it away for my GST, for my tax, and then have that bank account put it away. Try not to touch it. Once you put it away, you put it away. And then when the bill comes, here we go. We have the money. Yeah.
Yeah, I guess there's just a fear about the complexity, dealing with the ATO potentially. I mean, no one wants to probably call them and go through their website and figure out all the ins and outs. And that's something you would be doing day in, day out, right?
Yeah, definitely. I think everyone have their specialized area. If you ask me any knowledge about some other area, engineering, I have no idea about it, but I'm okay with tax. so I guess a business owner, especially, you run your business, you are good at what you're doing, but tax not necessarily your side.
Yeah. Okay.
So at this point, you need to bring in tax accountant professional to help you to manage that process and on early engagements.
So I'm not sure if this is different or not, but in terms of risk management, is this an area that comes up as well? I mean, auditing, I mean, the ATO is getting cracking down. I mean, they're tools. We mentioned AI earlier. I think they've got a lot of tools themselves.
Yeah.
Are they doing different things now to spot when people are doing?
ATO always on checking, but used to check large organizations. But now, because of all the technology available, AI, matching process, lots of programs get linked together. So they reach out pretty much all the angles, especially rental property space. I initially got a letter the other day say, hey, you didn't. We got a property. I noticed you purchased property, you rent it, right? How come you didn't declare rental income, right? So we look at it through the file why we didn't declare, because the property settled on the 29th of June. It's not even available for rent. That's why we're not declaring it, but see how far-reach ATO's system is, right? So this is just matching outside through the registry, through the Office of State Revenue, matching that side. And the other side which they matching is, or they do an average calculation, is based on tax return lodged. If there's 50,000 rental property schedule, if average the people declare or claim the repair maintenance is 2,000, but your tax return showing 10 grams, that definitely bring up some attentions. And then you get a letter, please explain, right? So that's some ATO definitely getting smarter on this space.
And how are you helping people mitigate that in upfront, or are you dealing with people who've got the problem and then you've just got to try and fix it?
I always say if you reactively deal with things, it's too late. You got to be upfront. You got to be to see if there's something you can do before you do that. So first things, we always make sure if we claim something in a tax return, we have reasonable, comfortable, we have something to substantiate that, just in case ATO lock the door. That's the first starting point. We try not to be a cowboy, put everything in and see what happens. Maybe we get lucky, right? We don't do that. We just make sure we are comfortable what we claim. The other part is if we see we have the insurance, something called accounting insurance in place, right, in our practice. So it's not compulsory for everyone to have that insurance cover, right? So that insurance pretty much cover the professional fee for such as accountant's fee, such as a tax lawyer's fee, in case ATO's audit, right? But that cover can be any time. After you take the cover, can be any time. ATO could be auditing 24 tax return. We are in 26 financial year, right? Could be auditing there. So as long as you covered, right, take up the cover, and the ATO asking questions, you are covered. So if we spot, if we feel some property, some taxpayer have higher risk, we always encourage them. We tell them what's the risk. We make sure they take the insurance cover, before we click the button. And that literally for one of the case have 7 rental properties, 7 of them, 7 rental properties. We said we think there's a risk, right? And I said, make sure you take up the cover. He said, okay, Joy, I listen to you. So he took the cover because halfway.
What sort of cover are you talking about?
It's called accountancy cover.
Okay.
Accountancy insurance cover. It's kind of cover. You talk to your accountant and make sure your accountant have this kind of a policy in place, right? Not every accountant offer this kind of insurance cover, but we do.
And that's for individual clients can take this out?
Or individual, any clients, individual super farm, business, any clients, rental property. So we said to make sure covered. He paid $70 in my memory. And how much the bill later on come to? It's 10 grams. Because the 7 rental property, we go through every single things, provide documents, ATO asks lots of questions, prepare for that process. It's very, very tedious process. And we make sure we're not looking back by the ATO say, now we're not happy, now I give you a penalty. And we don't want a penalty. We always make sure if anything we respond to ATO audit, we make sure we are comfortable we're going to get a positive feedback or positive result. That's what we're aiming for.
Okay, but they had the insurance in case.
Yeah, so in this case, he doesn't need to pay me or pay tax lawyer 10 grand. So he's quite happy, right? He's
Very
quite happy. And I think that's quite important. If there's a risk, make sure you cover that. And that's quite expensive when it's come to ATO audit.
Yeah, okay. Oh, definitely, I've learned something new there. That's good. So what about property investing? Because I know, that's my world, property, and tax is a big part of that world. Investors are looking to offset and take advantages of that. What are you seeing there? Do you see investors come? I mean, this must be a big part of the advice that you give them. What are some of the things there that people are looking to try and do when it comes to tax when they're investing in property?
Yeah, I always get a phone call, say, Joy, I'm going to buy a property. Where do I buy? The first question I ask them, where do you want to buy? Then they will say, I want to buy under my name. I heard someone tell me buy in a trust. I heard there's a news saying you buy it in a super farm, right? And some people have no idea what it is, right? But if some people some client already have done some background search, we will explain a bit more, right? What will be your current situation? How many property you already have? What is your income? What is your taxable income? How much do you make? If we buy in your personal name, what will be the tax impact, right? Do you run your business have a high risk? Do we need to shield that property away from that risk, business risk? So we talk quite a bit of things. And also, sometimes it's more than the tax from the tax department. It's from Office of State Revenue. You got a land tax as well, right? So we explore all these different options, look through the backgrounds, what is the income look like, what is the risk look like, and what is the cash flow. Cash flow is very important as well. And sometimes people even make quite good money, but they already have large borrowing under their personal name. They can't really borrow, right? And like you are a mortgage broker, so you know that it's already maxed out, so you can't really borrow. So we may explore the other option, which is a self-managed super fund, right? Self-managed super fund has some money sitting there, right? Is it possible using super fund's money? What is the tax impact? What is the, in and out in that super fund holding a property? So that's all the strategy we
and
consider.
This is really a separate part of your business, really. It's the whole SMSF mechanics. Probably one way to explain it, isn't it? Because am I right, that you would actually set up the fund? And
we are financial planner in that space. So we have that ability to give people the advice to say, what need to be thinking about if you have a self-managed super fund, right? What will be the cost involved? What will be the downside? What will be the plus side? When you sell this property, when you're in retirement phase, what will be the benefit out of that? We give them a comparison of the numbers in terms of tax. We tell them what's going on. Sometimes not every super fund buying property is not for everyone. We also need to look at, the risk,
Do
where
people come
the
to you
age.
when they're like got very small balances and sort of, what can we do here? I mean, I presume you need people to have sort of built up a reasonable number there to
definitely.
get started. Because there's ongoing costs as well.
Yeah, definitely. I got someone saying, Joy, I have 10 grand in the super fund. Can I set up a super fund? I want to buy cryptocurrency.
High risk.
Say no. No, this is not my word to recommend you set up a self-managed super fund. This is too much risk, and then it's not something you should be looking at, right? For you to set up a super fund to do that. Yeah. So if come to us, we make sure we do a full background checking, reasoning why they should or shouldn't, and then we go from there to exactly the plans, should we go ahead or should not? Yeah,
okay. So maybe this is a good time to just bring some of this to life, because I know you've had some interesting clients along the way.
Yeah.
And I'd love to sort of hear one of their stories, maybe someone you really helped or someone who kind of had some trouble. If you can, what comes to mind?
Yeah, I do have one of the clients. I think the point is before sometime life event, I call it a life event when you buy property or sell property. This is one of the life event. And if not planning well, it can end up lots of tax in your hand. So we have someone approaching us to planning to sell property. Interesting, it's in St. Leonard, in the property near here. So it's kind of a townhouse. So he wanted to sell, but he live overseas. He's an Australian citizen living overseas. So he wanted to sell. He wanted to see what's the tax impact. He said, I'm going to sell next year, right? I said, great, let's do some calculations, right? It's a calculation. It's not about, sale proceeds minus cost divided by 2, which is you got a discount, then times tax rate. It's not about that simple, because the personal rule change in 2012 about the, residency, about the capital gain tax, main resident exemption, everything else. So we did a very good checking calculation. Then we say, you have this much tax bill, right? It's over. If I remember, it's probably about over 130 or 140,000 tax bill. It's huge, right? So we said, what can we do? Then we look at their contribution history, and then we said, okay, you should be able to use 5 years, bring forward 5 years. Back then was 25 grams, right? 5 year, and then between husband and wife, it's a couple, right? Mm-hmm. Husband and wife, you can put in 150 grams. But we plan really well. It's not necessarily putting 150 grams. I think we end up putting around 145. We calculate. And we also tell them how much tax paid in the super fund, which is 15% in, right? And then how much is saved, right? 45% because now resident. So at the end of the day, we're able to save around 80 grams for the couple. They are quite happy, So the planning ahead is very important. I'm glad that they reached me out before they sell the property.
Yeah, because I mean, if they hadn't, they would have been on the hook for a big bill.
Yeah.
Okay, well, that's pretty rewarding as well.
Yeah, it is.
For you to actually have saved people money in a significant amount as well.
Yeah, sure. I think I enjoy that part when people say, Joy, thank you. You saved me so much tax. Oh, yes. And it just makes me feel nice and keep going. Next day, I'm going to office. Yes, I'm saving people's tax legally.
That's awesome. And so if you maybe this is the last question, but if someone's listening to this thinking, tax is just not for me, I'm sort of a little scared of the whole process. It's just alien to me. It's not something I really think about that often. What would you say to them? Is there a kind of a closing message, if you like?
I think any big decision, you should talk to your accountant first, right? And in life event decision, talk to your accountant before you do anything. That's the first point. And then I would say set up a business, also a live event, right? Talk to your accountant, see if there are any business structures we consider, rather than simply register ABN under your personal name. Is there any business structure, and
that's a critical moment.
Yeah.
The moment you start a business, that should be the key.
That should be the key. That should be the key.
Yeah.
Talk to your accountant. Any structure-wise, I need to consider before I do anything. And then accountant maybe say, you should set up a 2 bank account. You should manage your cash flow. And that's the starting point.
Okay.
Talk to professionals first.
Good advice. And I think the challenge is that people just don't know where to go. And then they perhaps overthink that part of it, and so they just ignore it.
Yeah.
But it's hopefully with things like this we can get ourselves out there, and people actually will know what to do and who to go and speak with. So, Joy, it's been a pleasure having you on. I really appreciate you being here. Lots of good little tips there, and I think
Thank you.
Just reach out, because that seems to be the main message. Just have those conversations before you make a big life event like starting a business or something else. So how can people get hold of you? What's the best way to reach you?
If you are local, we are in Parramatta. So literally 5 minutes walking from Parramatta Station or Westfield. So that's where we're located. But if you want to reach out to see, before you see us, maybe have a look at our website, which is www.beyondtaxation.com.au. Have a browse our website, see what service we offer. We do have quite good clients reviews there. Have a look around. It's always come from you hand out your personal information, financials. You do need a trust accountant on your side as your partner, right? As your business partner. So
awesome.
I think that's important.
I'll put your email and other details in the notes, and so people can reach you. No problem. Listen, thank you. This has been another awesome episode of the Property Web, and I really look forward to seeing you next time. So thank you.